Time for the business news now here on France 24, and Owen is here, and we're getting a bit of a flat run, shall we say, in the end of the quarter on the markets here, aren't we?
I'm just doing my jacket up here, I do apologise.
Almost catching him.
Slick transition onto set. Yes, you're right.
Since I slowed down a little bit?
I did. Yes, you're right.
Tried.
It's been a great quarter, of course. Many markets, the DAX, for example, up by nearly a quarter this year. And as you say, Stuart, a bit of a flat run today. And the past couple of days, at least, remember, we had UK growth revised down for the last quarter, raising fears that maybe this country is theoretically, at least, or technically going to be in recession. Remember, there's a strike in Spain as well that's begun this Thursday. You can see the IBEX at the bottom of our board there, down as you expect, around 0.7% or so. The rest of the European markets pretty flat as well. Asian markets, similar picture. The Nikkei down 0.7%, and the Hang Seng trading down around 1.5%. So those Eurozone concerns weighing down on stocks just a little bit. I'll mention the price of Brent crude as well. Oil really is the story of the week in terms of its price. We've seen it surging, of course, these last few weeks, up towards those record highs of $140. It down around $100 to $125 a barrel after some talks by Western governments about dipping into their oil reserves.
So oil prices have cooled just a fraction, as Owen was saying, but nowhere near enough for Western powers. Countries like the US, UK and now France, considering a coordinated dip into those emergency reserves. It's an unofficial declaration that a global fuel crisis is looming as prices surge beyond the means of billions of people. Oliver Farry has more.
In a bid to head off ever-increasing oil prices, France looks set to follow the United States and Britain in delving into its strategic reserves. Ministers from both countries are in negotiations to release reserves to drive prices down.
The United States made the request, and France is favourable to the idea.
France holds 17 million tonnes of oil reserves, enough for 3 months' emergency use. It has dipped into them before, most recently during the blockades of oil refineries by striking workers 2 years ago and during last year's Libyan war. Saudi Arabia has increased production in an attempt to drive oil prices down from the current $126 a barrel. But its oil minister said in the Financial Times Thursday the country can't do it all itself. Fears of shortages persist, and Egypt has seen many filling stations running dry over the past week. The planned move by France and the UK will have to meet the approval of the International Energy Agency. Germany is also unhappy, fearing lower prices in France might prompt motorists to take their custom across the border.
Just staying with the oil story, Stuart, worth mentioning the latest with that North Sea gas leak that we've been talking about as well. Total, the operators of that rig, now rejecting mounting fears that a giant explosion is in the pipeline over that the leak of that gas rig. There's concern that the gas leaking from that rig could ignite because it's very near a flare that's being used to burn off that very excess gas. Its shares have been trading down again in the last 24 hours or so, now down around 6%. That's wiped an estimated $9 billion off Total's market capitalisation.
Let's take a look at a couple of the day's other business headlines then. Facebook is to stop trading privately held shares as it finalises one of the biggest flotations in history. Shares Post, the firm that arranges the sale of private shares, has told investors it'll stop trading Facebook stock on Friday to calm fluctuations in the price. The social networking site offering $5 billion of shares to new investors for a listing on Wall Street that could give it a market capitalisation of $100 billion.
And the EU says it's reached a deal with mobile phone operators on lower limits for roaming charges. Under new legislation effective from the 1st of July, consumers will be allowed to shop around for roaming contracts on top of their existing domestic deals. The legislation is aimed at helping users find the most competitive prices for using their mobiles abroad. From July, calls abroad can cost no more than 29 euro cents a minute. That's down from 35 cents currently. OK, now it's going to be one of the biggest, if not, it will be the biggest sporting fixture ever held in the Ukraine. It's the co-host of the Euro 2012 football tournament that kicks off in July. In many ways, and at least in the opening group stage games, Ukraine has arguably the edge over its co-host Poland. That's because it's hosting some of the best supported teams in the world. The likes of Germany, the Netherlands, Sweden and England are all playing in Ukraine during their group stage matches. England traditionally are massively oversubscribed when it comes to international tournaments, but thousands of tickets have been left unsold. Football authorities say there is a significant capacity left in the run-up to this tournament. Well, let's get some more on this from Mark Perryman. He's one of the spokesmen and the leading figures in England's official fan club. He joins us on the line from Brighton in the UK. Good morning, Mark, and thanks for being with us here on the Business Show. I find it astonishing, I have to say, that so close to a major international tournament, England, of all teams, have so many tickets unsold. This is traditionally one of the teams you can count on to sell out stadiums, yet that hasn't happened in the run-up to this tournament.
Yeah, I think for seasoned England travellers, it's not such a surprise. You know, there's the recession. There's the fact that I think probably the most important factor is England's pitiful performance at the World Cup in 2010. We went there, probably the most fancied England side, certainly for 10, 20 years or so. We went out of the Group 16 stage, humiliated by the Germans, 4-1, after a very, very poor set of results in the group stage. And although we've improved since then, we've qualified direct, we've not had to go to a playoff, there's still not much hope and expectation around the team. Plus, the impression, I think the impression is wrong, by the way, that the impression is the Ukraine is difficult to get to, it's going to be pricey and difficult to get around once you get there.
Why could they not have thought about that beforehand, though? I mean, obviously they couldn't predict a global recession, but they must have known it was going to be difficult to get people to go all the way to Ukraine.
Well, I think the mistake that is often made is that the host countries don't really seem to learn the lessons of the previous host countries. South Africa, for instance, the impression was created, again, quite wrongly, that you were going to somewhere where you were likely to catch AIDS, you were going to be carjacked, you're going to be murdered and robbed. And in fact, the crime levels at the South African World Cup were the lowest ever. You know, but an impression is allowed to be created. And what the Ukraine needed to do right from the start, we were talking about at least a year ago, was to really engage in a public education campaign, if you like, particularly aimed at those likely to be travelling. But this is a place that you can get around. Obviously, the distances are considerable, but it's a place that you're going to remember for the rest of your footballing lives. And the word I can remember that the fans had when we realised we were playing Ukraine rather than Poland the night of the draw was it might be a more difficult place to get to, but our hunch is it's going to be a more memorable stay.
Mark, good to talk to you. Many thanks indeed for talking to us. That was Mark Perryman from England Fans. I think that's a national sport in itself, isn't it? Talking down England's chances before major tournaments.
Yeah, exactly. They'll probably do as rubbish as they usually do. Now, this one is going to go down as one of the most bizarre controversies ever in the UK. The Cornish pasty has become the centrepiece of a tax battle.
A little bit of explanation, perhaps, Stuart, for people from outside the UK and indeed outside Europe who aren't perhaps familiar with the Cornish pasty. It's a sort of mishmash of meat and vegetables all wrapped in a pastry case, one of the great staples of the British working man's lunch. This, believe it or not, and bizarrely has become the centrepiece, as Stuart says, of this tax battle. This is after the latest UK budget. The government in the UK wants to close a loophole that's traditionally allowed bakeries not to charge an extra 20% VAT on top of products like pasties, sausage rolls, all these heated products that you get in bakeries. And that's the point. Because they're left to cool, they're not considered out-and-out hot food, and therefore they're exempt from this tax. Yeah. That loophole has been closed because the UK government wants to raise around another £100 million, and it's caused a huge stink.
The pasty tax. I have to say that our wonderful editor, producer in the gallery this morning, he grew up in the US. He hasn't got a clue what we're talking about. He called it the Cornish pasty. Cornish pasty, Chris.
Well, potato. David Cameron, the UK Prime Minister, has been dragged right into this, of course. This is blown up in their faces. This budget was ostensibly aimed at making conditions a little bit easier for businesses, but this has come to embody this whole budget. And David Cameron, the UK Prime Minister, even had to avow his love for the humble pasty.
I'm a pasty eater myself. I go to Cornwall on holiday. I love a hot pasty. I think the last one I bought was from the West Cornwall Pasty Company, who I seem to remember I was in Leeds Station at the time, and the choice was whether to have one of their small ones or their large ones, and I've got a feeling I opted for the large one, and very good it was too.
So a bit of a PR disaster for the UK
Yeah,
government. Remember,
certainly,
it came under fire in that budget for removing the top rate of tax. And on a serious point, you've got bakery chains like Greggs, the biggest bakery chain in the UK. Its share price is down 5.5% as a direct result of this tax, and not the kind of advertisement that the UK needs right now when it's trying to encourage businesses to grow.
Pasty or pasty, what's the difference? That's it from us. More news coming up really shortly. Stay with us.